microfinance institutions. Yeah, this is the topic of today's discussion. Now, there are various microfinance institutions which are there in India. Now, what are the types of microfinance institutions are there? What are the functions these institutions which are performing? Now, before going to discuss in detail, we have to take the quotation from Milton. Friedman once said that the poor stay poor not because they are lazy, but because they have no access to the capital. So, according to his idea, yes, his idea is correct. Now, poor are poor because of they are away from the funds. When they are away from the funds, now they are not in a position to enhance their economic and financial stability. Now, for that the financial institutions are very much required. Now, in India, most of the people in villages, even in urban also, if they approach a banking company, the banker will ask so many documents. Now, because of that, they are not in a position to get the amount of loans, and so many people are not going to even come to a banking company, which they are not having any idea about these bank branches and the amount of loans which they are granting. Now, that is why from the even independents also, the central as well as the state governments, now which they are working for the purpose of providing the financial facilities to the people or the needy people. Now, for that, what the microfinance institutions which are doing? Now, even the people today outside the formal financing and excluded from the formal banking. Now, these exclusions even today also continuing. Now, for the purpose of reduction of this number of people which are excluded, now there are so many initiatives which are initiated by the central and the state governments. Now, in the form of creation of the different types of institutions, now which are very much required to help the underprivileged people in the society. So, microfinance institutions are the only one equipped to reach the unbanked masses and make the financial services accessible to them. Now, for that these institutions are very much required now. So, microfinance institutions are the financial companies that provide the small loans to people now who do not have any access to the banking facilities. Now, that is why the finance companies which are very much required today, and most of the financial institutions are working in different places. So, microfinance institutions are those organizations other than the banks providing microfinancial services. Now, not only the commercial banks which they are part of this, now the non-banking finance companies, now we will call it as NBFCs. Now, the other bank linkages which are there, now the NABARD is there, NABARD which is helping to the banking, and banks which are helping to the poor. So, NABARD is a lead agency, the NABARD which is playing an important lead role for the purpose of development or the upliftment of the poor people in the country. Now, there are different legal forms which we have now, and if you observe even in banking also, we have public sector banking companies, private sector banking companies, and even foreign banks which are also there. So, like that even the microfinance institutions. So, these institutions are helping the poor in lending the money or in lending the different requirements of the people, or offering the different products and services which we have already discussed. Now, the institutions which are registered under the Societies Act, now we will call it as societies. Societies also working. Now, the products and the services which these societies are offering to the people, and not only that, we also have trusts. Now, the trusts also offering different microfinance products to the people. Now, the registration may be in the form of the cooperatives, means cooperative societies also there. Now, these cooperative societies also granting the different types of loans. For example, cooperative societies are lending for purchase of the seeds which are required to the farmer, or cultivation of the land. Now, purchase of the farm equipments. Now, the cooperative societies which are helping. Now, not only that, even purchase of the fertilizer, pesticide. Now, the amount of money which is required by the farmers. Now, they are not in a position to generate the amount of funds for the purpose of buying these requirements. Now, cooperative societies which are also helping by supplying like this. Now, another important form of the registration which is there in the case of microfinance institutions is that section 25 companies. Now, these are the companies which are created according to the Indian Companies Act 1956 under section 25. But according to the Indian Companies Act 2013, the same thing which is addressed with the help of the section 8. So, section 8 of the Companies Act 2013, now which this section is concentrating on the formation of the companies. Now, this company which will work for the purpose of the poor people. Now, this is another form of institution which is created, and these institutions are successfully working in the country. Now, the other form of companies, financial institutions which we will also consider here is non-banking finance companies. So, simply we will call it as NBFCs. Now, there is a difference between the banking company and non-banking company. In the case of a banking company, a company which offers accepts the deposits and lend the loans to the needy people. Now, this is about banking. Now, in the case of a non-banking company, they will only lend, but they are not going to accept the deposits. Now, the non-banking companies which they will borrow from the banking companies. Now, it may be like the State Bank of India and other banks, they borrow. Now, these borrowed funds which will be lent to the poor people which are there in different places. So, this is about the setup which is there. So, it may be in the form of a non-banking company, it may be a section, the company which is created under section 25, cooperative societies, trusts, and the other organizations which are very much working for the betterment of the life of the poor people in the country. Now, we have to concentrate on the client outreach of these institutions in the country. Now, the clients which are there are the beneficiaries which are there under different institutions. Now, these are the institutions. Now, it denotes the total number of clients which are availed the financial services or the products which they are getting from the microfinance institutions. Now, based on that, here we have to concentrate on the gross loan portfolio. Now, the gross loans which are granted by these institutions. So, number of microfinance institutions across the microfinance industry, the size which is presented here, the size is, for example, the tier 1, tier 2, tier 3. So, tier 1 comes under less than 2.5 lakh clients. Now, this is the financial institutions which are having 23 in India. Now, tier 2, it is from 0.5 to 2.5 lakh clients. Now, the 40 institutions which are working. Now, the tier 3 which is less than 0.5 lakh, now 205 institutions are working. Totally 268 financial institutions which are working, and these are the number of clients which are there with these institutions. Now, the number which is also must be increased even in the near future, now for the purpose of the financial inclusion. Now, most of the people must be covered under this. If these are the facilities which are provided to them, now they can enhance their living pattern as well as the social pattern in the society. So, number of microfinance institutions across the legal form which is also presented here. Now, it may be created in the form of societies, 111 microfinance institutions which are registered under the Societies Act, and 21 microfinance institutions are registered under the trust, and 26 microfinance institutions which are registered under the section 25 of the Companies Act 1956, and the 18 are created under the Cooperative Societies Act, and one institution which is created under the Local Area Bank, and 91 institutions which are created under the non-banking finance companies. So, total institutions which are there 216. Now, according to the Directory of Microfinance Institutions in India 2014 report. Now, the number of microfinance institutions across the states. So, how many institutions which are working under the different states, and the clients which we have already discussed. Now, Andhra Pradesh 10 microfinance institutions, Assam 18, Bihar 11. So, like that here I have presented the total list of the institutions which are working with different states. Bihar 11, Delhi 7, Haryana 1, now Gujarat, Jharkhand, Karnataka, like that. These are the institutions which are working with the various states. Now, the microfinance concept is very much popular in Andhra Pradesh, now even in Telangana. Now, the other states are Gujarat and Haryana, which is also very much popular, and most of the people which they are availing these facilities, the products and services offered by the microfinance institutions. Even in our state, the number of self-help groups are there, so many self-help groups which they are working. Even you take even a small village also, there are 5 to 10 self-help groups are there, and these self-help groups they are benefiting like anything. Now, you can take before the entering a family into a self-help group, and after entering a family into a self-help group, there is a huge change which is identified by the so many number of studies. So, their economic, their living pattern, and not only that, they are providing the education to their children, and their social status also, which is very much increased in the society. Now, that is why finance is playing an important role. Now, the finance must be provided by the certain formal institutions. Now, these are the institutions working hard to provide the benefit to the society. Now, based on that, so what are the objectives of the microfinance institutions? Now, the objectives of the microfinance institutions are: the quality of the life of the poor must be improved. Now, for the purpose of enhancement of the quality of the life. So, quality of the life which will depend on, the way they are living, and the food they are consuming, the shelter which they are using, now the various facilities which they are getting, and not only that, the recognition which they are getting in the society. Now, that is why these institutions which they want to enhance the poor people's life, now they want to provide in different ways, and the various products which we have already discussed, these are the products are offering, and they can making use of these products, and they are getting the benefit out of it. Now, the second important objective is developing the sustainable communities. Now, the sustainable development is very much required. Now, the sustainable development goals are developed in the international level, even the country in India, which is also recognized the importance of sustainable development. Now, even governments are working for the purpose of the sustainable development of the different communities in the country. And the last one is the reduce the poverty of the people. So, ultimate aim or ultimate goal of any financial institution is that how to reduce the poverty. Now, the definition which we have already discussed, the people those who are earning less than $1.23 a day, now they are into poverty. If they are earning more than that, now they are not into poverty. Anyhow, whatever the definitions which are given by the economists. So, according to the time to time, the definitions which will change, but ultimately what are the facilities which they are getting, what type of life they are leading is plays an important role. Now, microfinance institutions, its structure. Now, the microfinance institutions which are working in India is having the structure like joint liability group. So, this is the group which is created, and this group is working. Now, this group will explain about the informal groups they will create, and this group will consist of 10 individuals. Now, these individuals which they will get the benefit out of it, and they can also approach the banking companies or the non-banking companies for the purpose of taking the loans from these institutions. Now, not only that, the other popular structure of the microfinance institutions is that self-help groups. Now, this is a very much popular group which is working in different states of the country, and this group consists of mostly the women. Now, women are part of the self-help group. Now, the group which consists of the 10 members or the 15 members like that, and this group will work for the purpose of betterment of their lives, and not only that, they will borrow the money from the bank which is linked to them, and they will approach the bank. So, they will approach the bank manager, and the bank manager will grant the loan, and they will take the loan and they will distribute the loan among them, and they will also have one group leader. That group leader will play an important role. Now, this group leader will go to the bank manager, and they will talk about the amount of money which they require, and according to that what are the activities which they are taking up, and for what purpose they are using this money like that, even they can explain and share, and what is the amount of money which is required for further, and based on that the groups which are repaying regularly, the same groups which are also eligible for get the further and further loans from the linked or the banking companies like. Now, according to that, so there are two important structures which are there in the case of these microfinance institutions. One is the self-help groups, another is the joint lending group. So, these groups will work, and these are the groups which are working, and not only that, another model which is very much popular in Bangladesh, that is called Grameen Bank model. Now, this Grameen Bank model which is also helping the poor people. Now, Muhammad Yunus created this idea, and based on the expertise knowledge of the Muhammad Yunus. Now, the Muhammad Yunus created this Grameen Bank idea, and the Bangladesh which is created this banking, and these banks what they will do, they will establish the branches in remote areas, and they can also lend the small amount of money to the poor people. Now, it may be in different form of it may be a cottage industry, or maybe the people which they made handmade products. So, like that whatever the products which they are preparing, they require some amount of seed capital for the purpose of buying the raw material from the market. Now, whatever the raw material they will buy, now this raw material will be transformed into a final product, and they will sell the final product in the market. So, whatever the money they will get, now out of that they can also repay the amount to this Grameen Bank. So, this Grameen Bank model is the popular model in the Bangladesh, which is also very much useful in other countries. Now, rural cooperatives also working hard for the betterment of the lives of the society, which is very much backward. Now, these are the 4 important models or the structures which are there. So, joint liability group, self-help group, Gramina bank model and the rural cooperatives. So, these models which are working now, according to the states or the places, the people which may be very much equipped with these institutions, now they can also taking the benefit out of it. Now, what are the types of functions which are performed by the microfinance institutions in India? Now, the functions which are performed by the microfinance institutions are providing the loans. So, which we are even discussing from the beginning, the amount of money which is very much required. So, whatever the money is required, how they will get the money? So, nobody is going to lend to them and nobody will come forward to lend. So, because of that, a formal system which is created, that formal system now we will call it as the microfinance institutions. So, microfinance institutions are lending now for the various purposes, whatever may be the purpose which is there, it may be a farmer, it may be a laborer, now it may be a daily wage like. Now, according to that the funds which are very much required for the purpose of, for example, purchase farm equipment, or the children they want to go with the higher studies of their children. So, education loans like. Now, accepting the deposits, the financial institutions which also accept the deposits, the small amount of deposits from the poor people. So, whatever the money they will get every day. So, the amount of money which will be reused for the purpose of purchase of the material or the whatever the products they will buy in the market, wholesale market, and they will sell in the retail. So, the extra money whatever they generate out of that extra money, now they want to save it, because of that they can go for the depositing the small amount of money every day or every week like. Now, this is the second. So, this activity is possible when the financial institutions may permit to do like this. Now, otherwise what will happen, you know. So, whatever the money they may be earned today, if this saving habit is not there, now they are not in a position to deposit, simply they will expend the money whatever they earned on that day. So, that is why the cultivation of this habit is very important among the people, those who are having the small amount of incomes. So, how to save out of that? So, whatever, if 500 rupees may be earned a day or 1000 rupees may be earned a day. Now, according to that they must try to plan for that. Now, remittance of the funds, issue of the credit or the debit cards, these cards also now required, and they can also withdraw the amount of money, or they can also make use of the credit facilities. Now, life insurance products, non-life insurance products. Now, pension, now they can also plan for the pension for now after the 60 years or the 50 years or 70 years, whatever the rural people they can work according to the physically they may be fit. So, later they are not in a position to generate the amount of money, because they are not in a position to work. So, because of n number of reasons, now people must start for the saving the amount of money for the purpose of the pension benefits. Now, factoring, bill discounting, financial counseling, etc. Now, these are the facilities which are very much provided by the financial institutions. So, microfinance institutions which are playing a very important role now, because they are not in a position to get the amount of funds from anybody. If they approach the money lenders, they will charge the higher the rate of interest. Now, which even we experienced very recently, even educated also, they are not getting the formal loan from the banking companies. Now, they may be taking the loans from online loans. So, the rate of interest which they are charged very high. Now, whatever the loan which they may be taken from these online sites, they are not in a position to repay it because of the corona pandemic. Now, they are not into the repayment, and because of the information which they have already supplied to these platforms, now they are arousing like anything. Now, we may already experience 2 to 3 people may already suicide. Now, these are the attempts which are also taking place because of the people which are very much not aware of the formal lending. So, if they are not aware of the formal lending or formal lending may be refused by the institutions, now where they must go. So, they must go like this. Now, because of these things, now it leads to they are not into repayment. So, they may be into trouble. So, when they are into deep trouble, now they are not in a position to repay it. So, their conditions may be very becomes very poor and they are not in a position to repay it. Microfinance institutions are registered under, it may be a Societies Act, it may be Cooperative Societies Act, it may be Companies Act. Now, under that we also have a non-banking company. Now, these are the institutions which are registered. So, whatever may be the form which may be registered, the ultimate goal of these institutions is very simple. So, how to help the poor people in the country. Now, how to grant the different products or the services. Now, they are working on this particular subject and they are also wants to go with financial inclusion. So, financial inclusion is possible only because of the financial institutions. If financial institutions are come forward, now liberally if they grant the loans, liberally if they help the people, now because of that, now they will the people will get the benefit out of it. So, the role of the microfinance institutions every day is increasing. So, formal banking companies are not in a position to lend to them, they are not in a position to go to the villages. Now, if you observe the bank branches which are there today. So, bank branches are there, it may be HDFC, ICICI or it may be SBI, like that these are the bank branches which are there up to only mandal level. But people are there in different villages, far away villages they are living. So, who will go to them? Only microfinance institutions will approach them, otherwise they are not in a position to get any amount of funds. So, financial education or the financial literacy is very much required today. So, most of the people they are logging about the financial literacy. For example, even educated people also they won't have any knowledge about how to go for their tax returns. So, what they will do, simply they are depending on the chartered accountants. Now, today we must do on our own, because of this technology everything is simplified. Now, for that this technology is also must be used by these microfinance institutions. Today these microfinance institutions are also using the technology. Most of the people they are having the mobile cell phones, and because of these mobile cell phones they may be connected to the formal banking system.